Welcome to the Curious and Calculated Tax Bracket Manager. What I'm going to do today is walk through a sample tax return, show you how easy it is to enter the information, make an adjustment, take a look at the brackets, and make strategic, smart tax planning decisions. I'm going to use an actual client that I have. You can't see it right now, but I will be entering the data just to protect their information and walk through just the whole process here. So tax return, I have it open in the second screen. Filing status, married filing jointly. 2021, they plan on still being married. Taxpayer's age, we don't know that age based on the tax return, but if it's your client or yourself, you will know that, so you enter that. This is important, so you have the number, age, 65 and over. This matters for the standard deduction. So this client's first tax number is qualified dividends. So I enter that. I jump through the boxes using the tab. I only enter in the taxable IRA distributions. It doesn't matter what the gross amount is. This person happened to do a qualified charitable distribution last year, so there's zero taxable income there. Pensions, annuities, same thing. Only want the taxable number, so that's the only box there. Social Security. The way the rules work for Social Security is you do have to enter the gross number, so let's enter that. Next, capital gains or losses. So I need to go to my tax return, jump to Schedule D. They have no short-term capital gains. They only have long-term capital gains. So I enter that number. Jump back to the first page. I look at the total income, 144,812, matches the tax return. Look at the adjusted gross income, 144,812, matches the tax return. Okay, now I go to the next section. Standard itemized deductions. Well, it's above a standard deduction amount of 20-something thousand, so we go to Schedule A. Now I go down here, enter the information. Total itemized deductions, 64,049. Tax return says 64,050. We're off by $1. Don't care. Want to be smart and efficient. So we move on. Next line item is qualified business income. Enter that number. Taxable income, 80,679. Matches perfect. Regular income tax from the tax return, 59.38 on the tax return, 59.41 on here. Off $3, don't care. Immaterial. This client situation last year, they came to me, said, hey, I want to make a big donation. I'm thinking of roughly this amount. I said, awesome, love it. Well, a few things to consider. You do have limitations based on your adjusted gross income of how much you can deduct. Then there's also a factor for you is that you're actually in a 0% capital gains bracket. He said, what? Never heard of such a thing. Yes, there really is a 0% capital gains bracket. So we looked at it, found a number that matched his goal, roughly his goal to donate, and utilize up the 0% bracket. Basically, that $20,000 you see wouldn't have had it if we wouldn't have had this tax planning conversation. So we harvested $20,000 at 0% tax. Client loves paying that rate. Well, this year, interesting twist. Their pension annuities line, well, it's going away. It was an annuity. So, typo. What's happened? Okay, now it's at 0 this year. If we look here, okay, line item right underneath, Social Security. Last year taxable was 36,000. Now it's 11. Oh yeah, well it's tax based on your modified adjusted gross income. Keep that in mind. Oh yeah, what else is adjusted by that? Your charitable contributions. Let's say we have the same number that we plan on donating. Well, look at that. We don't get the same deduction. $0 of tax. Well, let's just look at those brackets. This is crazy. Taxable income, 13,000. Nothing in the ordinary. Capital gain. Well, look at that. He has a distance to the 0% bracket. So let's go in and see if we do 67,000 of capital gains, what that does us. Oh, let's pause there. Remember, if we enter more income, we're probably going to have more taxable income for Social Security. So there's a corresponding adjustment there. Well, you know, let's make this simple. Let's look at income, adjusted gross income. Last year's at 144. This year's showing at 40. Let's do $100,000 $1,000 difference. Oh yeah, well, our Social Security became taxable, so it jumped up about 20,000 because we were about 20,000 lower. So let's just drop this to 80,000. Okay, let's say they had 80,000 of long-term capital gains. Adjusted gross income is about the same. Our charitable contributions, look at that. Deductions the same. Let's go look at the brackets. Let's see what's happened. Oh, $1,000 over into the 15% bracket. No big deal. Looks awesome. Well, fine. We want to be precise because you're a tax preparer. If you're doing this, you're probably pretty analytical. So take a look there. Reduce it to 79,000. Recommendation is sell $79,000 of capital gains. Recognize that we want to have 99,000 total for the year, and donate about the same as last year, and everything is awesome. Look at this. You just saved the client or yourself a ton of tax by recognizing an extra $79,000 of capital gain income and paying a 0% rate. Heck, maybe you're in a state that actually charges tax on the gross amount. Fine, you paid that. But at the end of the day, you avoided paying 15% by recognizing the 0% bracket. If we just let it go, we'd have missed this opportunity. It's golden. This is why this calculator is awesome. We just did that in 5 minutes, 6 minutes, whatever. There's a chart here if you want to be interactive. If we have more of a bigger picture planning, 3 to 10 years, I'll get into those later. But at the end of the day, look at this. This was easy. We just made the client a lot of money. You saved yourself a lot of money if it was yourself. Thank you for your time. Send some feedback. Have a great day.